as a publicly traded company after the closing bell tomorrow. I should say it's tomorrow. For those of you, I got a little impatient and said it was today, but it's after the bell tomorrow. And the big question, of course, is what should investors and Wall Street expect from the social media giant? Joining us now from L.A., CNBC's media and entertainment correspondents got up early for us this morning, Julia Boorstin, and on the set, Kayla Tausche. And we've got John Steinberg. He's the BuzzFeed president and chief operating officer. I'm going to go to you, Julia, first. In terms of revenue, in terms of thinking about the top line, which I imagine in this business is what people are going to focus on even more than the bottom line, how do you think about it?
Well, the big issue for Facebook is, of course, advertising. It's the vast majority of their revenue, about 85% of their revenue. And when it comes to advertising, the big question then is mobile. Facebook only started serving mobile ads in March, so this is the first real quarter we could see any impact of mobile advertising. Facebook has taken various steps to make it easier for advertisers to buy mobile ads. It's harder to skip those ads. They're right there in your face. And so I think that we should get a pretty good indication of how mobile is going to boost the overall ad revenue, but I think that we have to be cautious and know that we're not going to see the real impact of a lot of these mobile improvements they've made until after this quarter. But I think it's going to be a huge focus on mobile.
John, we've been having a debate with Kate. You guys were having a debate right here during the commercial break about this very issue.
Well, when I was on last, I said that I thought the concern about mobile for Facebook was unreasonably negative, that it should be a positive because at BuzzFeed we were seeing mobile social content, mobile social advertising perform so much better than even on the desktop. And
People clicking on the ads on the mobile devices.
The click-through rates on Facebook-sponsored stories, their true social advertising in mobile, are performing better from all the reports that I'm reading relative to even desktop. And on desktop, of course, they're performing better than a traditional banner ad. At BuzzFeed, we see the same thing. Our mobile units are clicking through, our mobile story units are clicking through at 3%. On the desktop, they're clicking through at 2%. But that's way better than a banner. A banner is 10 basis points, 20 basis points.
My point as a user was just that if you click on something on a mobile device, you're already captured in a smaller space. And if you get somewhere that you don't want to be, you can't get out of it as quickly.
I agree with that point, but I also am slightly convinced by John's point. Kayla, we were just talking about this in the commercial break before. Just that idea, if you get suckered into a story and you trick me into going there, I've never clicked on a banner ad, but if you find my interest,
take a cruise.
But if you find my interest and you bring me in, maybe.
And we're not talking about banner ads. We're talking about social advertising. We're talking about stories people want to engage in, and it's in the stream, and people are engaging with them at a much higher rate. That's why Twitter is having such great performance in mobile as well.
Hey, Julia, what's the buzz in terms of advertisers sticking with Facebook or new advertisers coming on? Obviously, right before the IPO, there was the big debate about what was going on with General Motors. Then it sounded like they were coming back into the fold. Is there any color there?
Well, that's the big debate. Do Facebook ads work? And maybe John can speak a little bit more to this. But we have seen, while General Motors went away from Facebook, some big advertisers like Ford and Coca-Cola came out and said how much they do really believe in Facebook as a platform to connect with their customers. But there was a new report out just last week from a company called, I think it was called TBG, that found that Facebook ad rates are growing, which indicates that they're working because advertisers are coming to them, and their click-through rates are working. Now, there have been dozens and dozens and dozens of reports out about whether or not Facebook ads work. There was one a couple months ago from ComScore that Facebook participated in. But one thing that these reports raise questions about is, do click-through rates really matter, or is it more about the display impressions? And if people see something, are they going to have positive associations about it weeks later without even clicking through? So, John, I don't know what you think about that.
That's a harder sell.
Really work?
Yeah, so I think there's two things here. First of all, I've read the TPG report and the Ad Parlor report. What we're seeing is the sponsored social content people engage with at such a higher rate than they would with a banner. And in all the research that we've done at BuzzFeed with partners like GE or Microsoft, we see that people's disposition to purchase, affinity for a brand, kind of top of the funnel stuff is way higher when they engage with social advertising than with a banner ad. So across all metrics, the content performs
Do we
better.
think that users, though, are using Facebook more? I mean, there were so many reports that came out right around the IPO where there was a sense that somehow this was all sort of tapering off.
Well, I think what's amazing is I looked at the JP Morgan report last night, and 50% of users are interacting in mobile, and 10% or 12% of users are mobile only. So the usage numbers continue to grow. They're going to pass 1 billion users. 50% of users are active daily. I mean, that's like people drinking water or soda.
But from a growth standpoint, there's only so many more users Facebook can add in the U.S. I think the issue is that Facebook needs to start monetizing its international users at the rate that it's monetizing its U.S. users. So it's seeing massive growth in these markets like Brazil, and so that's where it starts needs to start ramping up the revenue.
Kayla's got another, I think, sort of interesting angle on this whole thing, which I want to talk about costs. We talked about the revenue side, but there's some interesting costs that are going to come into play this quarter around some of the restricted shares that they may have to pay off for some of these early employees.
You always see earnings X items plus items, and the fact of the matter is your first quarter as a public company, especially if you've been private for as long as Facebook had, 8 years, chances you've been compensating your employees in stock that has been restricted until a liquidity event, and you take that charge in the quarter of the liquidity event. I think a lot of people, even though it's right there in the S1, the ballpark number for what that's going to be, people overlook that. And if you take a look at Zynga's first quarter as a public company, they took about a $500 million charge on that restricted stock unit event. And the stock was down about 20% after its first quarter earnings. And that could be a knee-jerk reaction
when people see that big number.
Exactly. So Facebook's number, they came out in their S1. It's on page 19 and 54, I believe, for those of you playing at home. But the share-based compensation expense will include approximately $965 million that they will incur in the first quarter, give or take $300 million for taxes. That could swing either way depending on where it falls. So that's roughly $1 billion that's going to come off of their top line.
What's the lockup for the shares in terms of employees and others, in terms of when they may sell and what kind of cloud or overhang that might have on the shares right now?
So we actually have the lockup for you right here. On August 15th, 268 million shares are eligible to be sold. That steps up a little bit. Take a look at November 13th. 1.33 billion shares will be coming to the market. And then December 13th, 124 million shares will come to the market, or will be eligible to be sold, we should say. And the idea was to get the bulk of these shares out there before the end of the year, so that if these employees and early investors were planning to sell, that they wouldn't incur potentially steeper capital gains taxes. So it's very strategic what they were doing there. November 13th obviously is going to be a big day for the stock. RSUs are a big issue here.
John, what's the one surprise? What should be what I'm
looking for? Everyone wants to listen to the call, right? I mean, everybody knows the revenue is going to basically be flat. What we're going to look for is big progress on social advertising, on sponsored stories. I think we're going to hear a ton about that. I think users are going to be engaging with them tremendously. Brands are going to be satisfied. You're going to hear all that. And then we're going to hear about the Facebook exchange, which is basically going to turn those marketplace ads, which are right now kind of just small banner units, into data-rich, really gold for direct marketers. So those are the 2 points. And to Julia's point, that is what we will hear about in future quarters. It's really kind of cranking up the revenue for them, I think.
And one quick thing that I just want to throw out there is it's important to watch research. That was a big sticking point for investors in the roadshows, because R&D spending was growing at a faster rate than revenue. And you could argue that as an 8-year-old company, you should have your CapEx under control. You shouldn't be spending that much and growing that much. And Ebersman said it will affect margins in the near term. They will be increasing revenue, or research rather, as both a dollar amount and a percentage of revenue. Research is up 168% year over year.
Thank you.
And one quick thing that we've been talking.
Julie, we got to run, unfortunately, but we thank you for a terrific conversation. Kayla, thank you, John.
Thank you,
appreciate it, guys. Appreciate it very, very much.